Proprietary trading firms are constantly testing systems for creating edges in their trading, and this is a time-consuming, intense process. I'm Seth Freuberg, the head trader of SMB Capital's options trading desk here in Manhattan, and the traders on our options trading desk are continuously looking at options trading systems that can provide superior returns for the firm and ourselves. In this video, we're going to be discussing a system that we recently developed in a specific dramatic example that happened just last week when we implemented the system. So stick around. I think you're going to glean some important lessons from this video. Hi, I'm Seth Freuberg, and I'm the head trader of SMB Capital's options trading desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and in our offices here in New York City. Now, I'd like to suggest that you click on the subscribe button right now so that you don't miss any of our free trading videos that we produce for traders and investors all over the world. They're really very valuable. Okay, so we spent a huge chunk of time last year working on a one-day options trade hypothesis that we had developed on the trading desk here, and it goes something like this. If we could find a reliable indicator that gave us an edge on predicting whether the market was more likely to close higher than it opened, or for that matter, more likely to close lower than it opened, then there are a number of options trading strategies that could make very good use of that information. And so after years of searching, we finally found Scott Andrews of InvestiQuant down in North Carolina, who had developed a one-day signal that they call the IQ Adaptive Ensemble Signal, which he spent a whole lot of money and years to develop. And so we spent, as I said, the better part of a year applying Scott's signal to many different option strategies. And when we finally found the optimal way to use the IQ signal, the results were pretty incredible, as you can see. The technique which we developed, which is really a very simple options trade known as the credit spread, produced over 85% annual returns on a $10,000 account, over 56% on a $15,000 account, and more than 42% if you wanted to be really conservative and trade this using a $20,000 account. The amount of testing and stress testing we did on this strategy was unbelievable and required an immense amount of resources and resulted in our coming up with this system that we trade on our desk and also make available to retail traders. And this system is picky. It generates about 3 signals a month, and our testing showed this option strategy combined with the IQ signal has greater than an 80% win rate. And so we were feeling very good about this system. So last Friday, we sent out a message to our subscribers that there was likely to be a long signal that day. And so they should get ready to enter a particular options trade known as a put credit spread, which is a great high probability way to take advantage of a bullish or bearish one-day signal. Now, before we get into what happened with this trade last Friday, if you want to learn the details of 3 option strategies that our pro traders use all the time, including the unique options trick that allows you to make money while you wait to buy stock or ETFs at the price you want, or the options income strategy that allows you to make consistent money whether the market goes up, down, or sideways, or how to make money on a stock or index trade even if you're outright wrong on the direction. If you're interested, click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in a new window, so don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com. Believe me, you don't want to miss this workshop, so pause the video, sign up now, and then resume watching. Okay, so now to apply the IQ signals we mentioned, we decided to use an option strategy known as the credit spread. And when we get a long signal, we use a particular kind of credit spread known as a put credit spread. And so to run you through what happened on Friday, we need to make sure that you understand how index options work on puts. Now, for those of you familiar with index options on puts, just hang in there. This is going to be quick, and then we'll get back to the trade. Okay, so think of an index put option as a bet that pays off if an index closes below what's known as the strike price of the put option on the day that the option expires. If the index does close below the put strike price, then the owner of the put gets $100 per point that the market closes below that put's strike price. So for example, if an index closed at 4,032, then the 4,075 put would be worth $4,300 because the market closed 43 points below the put strike price of 4,075. But the 4,000 puts, those would expire worthless because the market didn't close below 4,000. And this is a very significant fact because if you're the seller of that put, you get to just pocket the premium you were paid for selling that put in the first place. So keep that in mind as we go through this trade. Okay, so last Friday morning, the S&P 500 futures were rallying. And while this only happens a few times a month, this very selective system fired off a long signal indicating that these particular market conditions had a historical edge, which indicated that the market is more likely to close higher than it opened. And so based on how our system works, some of our subscribers would have chosen the following trade, which is one of the strategies that we teach our subscribers in order to make a trade based on the signal. And that would be to enter into what's called a put credit spread. And so in this case, that would involve selling a put expiring today at a 3,800 strike price, which is very slightly below where the market opened up that day at 3,802, which is where the system will usually suggest the short put part of the trade be placed, right below where the market opens up on a long signal, and then simultaneously you'll buy the 3780 put 20 points below the one you sold. And you'll see a little bit later why that makes sense. But for now, let's just remember that this signal is not saying that the market will never get below its opening price during the trading day. It's instead saying the signal is probable that the market will close higher than where it opened at 3802 in this case. Now let's take a look at what happened cash flow wise upon entry of this put credit spread. And as you can see, we sold the 3,800 put for 1956, but remember that pays off $100 per point below the strike price. So you multiply that by 100, and so your broker would credit your account with $1,956. But then simultaneously, you'll also be buying the 3780 put for 1243, which therefore translates into a cash outflow of 1243 for a net cash inflow for the whole spread of $713. A trade where your maximum risk is $1,200. So that's the most you can lose on the trade if it goes bad. Okay, so now let's move to 1030. And as you can see, it looks like we're in trouble on the trade as to the SPX index has sold off over 40 points. And in fact, we are down a lot of money on the trade, as you can see, as the put we sold for about $19 has now blown up in value to over $44. And the long put has also blown up from its original value, which was roughly $12, up to $30.18. And so what some of our subscribers did, which we teach them not to do, by the way, because this is a full day signal, not a first hour signal. But nonetheless, some of them decided, hey, this signal, which you guys spent all year studying, it obviously doesn't work because the market went down in the first hour today. So we better get out of this thing before we lose the full $1,200 that we're risking on the trade. Because obviously, if the SPX index sells off to 3760, it obviously won't rally back to over 3802. Its opening price of the day. It sold off too much. So, hey, let's get out of this now before it's too late. And so to do that, to close a put credit spread trade, what you've got to do is to buy back the short put you sold, in this case at 3,800, and sell off the put you bought, which is the 3,780. Well, let's take a look at the result of doing that. And as you can see, taking into consideration the 713 we received initially for selling the put credit spread, we then have to pay a whopping $4,425 to buy back and close that put we sold up at 3,800. The reason that price is so high is because, let's say hypothetically, the market closed right now at that moment, 1030. Well, that would mean you'd owe $4,000 because the market is 40 points below 3,800. And the owner of the put would get $100 per point. So that comes to $4,000. And it's only the first hour. And so it could get worse. And so the one we're buying that put from has to really load that price up to make sure he doesn't take a bath on selling it to you. So the market was asking for even more, for $4,425 to be exact at that point. And the same reasoning, of course, goes for the 3780 that we own that we're selling now. It's really deep in the money at this point also. So we're actually making great money on that one. But when you add it all together, we lost so much on that short put that the big profit we made on the long put did not compensate enough, resulting in a final outcome of a loss of $695 on the whole transaction. But remember, I mentioned that we teach our traders not to do this, that this is a full day signal. And so if we move to the end of the day, we'll see that after selling off even further down below to 37.40 later that morning, the market staged a dramatic bounce and it ultimately closed at 38.41, 39 points above its opening price of 38.02. So let's analyze the outcome of this one-day trade. And as you can see, as we mentioned earlier, if the index closes above the strike price of a put on expiration day, that put has no value because it only pays off if the market closes below its strike price. And so clearly the 3,800 put 41 points below the index's closing price, as does the 3780 put. And so when that happens, when neither option has any value, you just get to keep that original $713 that you collected for a full win on the trade. And so after a dramatic day like that, I received a few emails, as you would imagine, that illustrate exactly the point I'm making about panicking out of a trade versus trusting your system. And so Keith said, I was able to take the correct trade, although I had weak hands today, and closed it out early during the morning downturn, only to see it go to maximum profit. I need to work on my patience, says Keith. Whereas Kevin wrote in, before the open, I was personally feeling bearish, but I was positioned slightly bullish with other monthly options trades and was thinking that this trade might be a loser. But I'm not going to second guess the system. If you want the results that the system's backtesting shows you, you've got to take every trade exactly as offered. The drawdown for today's trade was a good test as to whether I could psychologically handle the system. Here's what I wrote to myself in my journal after the first 90 minutes of trading. This trade looks like a loser, down about 4% of the capital allocated for this trading system. SPX keeps making lower lows for the day. The market would have to rally over 100 points intraday for this trade to work. Combined with losses in other positions, this is considerable. I'm feeling pretty sick right now. Of course, that was about the point where the market turned around. I'm glad it worked out this time and I stuck to my disciplines and trusted the system. And so there you have it. Those two messages I received later that day really encapsulate what I'd like you to take away from today's video. Look, if you have guys like us spending 10 months testing till we can't see straight to bring you in a system that is the best version of what we're able to find in our research, then if you're going to subscribe to the system and spend your hard-earned money to do that, you might as well give the system a shot and not try to second guess it. My many years of experience trading has shown me clearly that traders who don't trust their systems and instead act emotionally in the moment ultimately regret the decisions they make to ignore their systems and take some precipitous, unplanned action despite all the blood, sweat, and tears they put into establishing the trading system in the first place. If you're trading a systematic trade, then trade the systematic trade. I'm not saying that the system's going to work every time. The system has historically had over an 80% win rate, which means you're going to lose about 20% of the time also. But what I am saying is that you as an individual trader are not in the long run going to outsmart your own system through your using emotions and instead of using your system. Professional traders learn to trust their systems, and failed traders keep trying to ignore the findings of their systems, which if you think about it, makes no sense at all. Now, just to remind you, if you're serious about your trading, you need to check out the free intensive options class that we're currently running, where you'll learn 3 real-world option strategies that our professional options traders use all the time. Just click the link that should be appearing now at the top right corner of your screen, or you can just head on over to optionsclass.com to register for this free workshop directly. It really is a rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. And please don't forget to click on the subscribe button right now so you won't miss all of the free trading videos that we're posting constantly on our channel to help you to improve your game as an options trader. And if you're interested in the system we mentioned in this video, please leave a comment below and we'll show you how to get some more information about it.